Robinhood stock just finished one of its most dramatic trading days in recent memory. After closing last Friday at $101.25, down about 1.5%, the stock absolutely exploded higher on Monday, its first regular session since the news broke that Robinhood will officially be joining the S&P 500 index later this month. By the close of today's trade, Hood stock had surged more than 15%, touching levels above $117 in intraday action before settling in the 100 teens. This wasn't just a routine rally. This was Robinhood stepping into the spotlight in a way that long-time shareholders have been waiting for. The S&P 500 inclusion is official, Caesars Entertainment is out, and Robinhood is in. For a company that has battled skepticism since its IPO, this is validation. It's a milestone moment that says Robinhood isn't just a speculative fintech play anymore, it's now part of the most important index in the world. So what really happened today, what pushed the stock so high, and what should investors expect as we move through the rest of the week? Let's unpack all of this. The first thing to understand is the timing. The S&P Dow Jones indices announced late Friday after the close that Robinhood, along with AppLovin and Emka Group, would be added to the S&P 500 effective September 22. That means Monday was the very first regular session for markets to react to the news. The rally we saw today was essentially the market processing that information and revaluing the stock accordingly. Now, why does S&P 500 inclusion matter so much? It comes down to two big things: inflows and legitimacy. Every single fund that tracks the S&P 500, and there are trillions of dollars benchmarked against it, is now obligated to buy Robinhood stock. That's billions of dollars in passive inflows headed Robinhood's way. This buying pressure creates a baseline of demand that didn't exist before. On top of that, the index inclusion acts like a stamp of approval. For years, Robinhood has been seen as a controversial upstart, loved by some for democratizing investing and criticized by others for its role in meme stock volatility. But being added to the S&P 500 changes that narrative. It places Robinhood alongside Apple, Microsoft, JP Morgan, and other corporate giants. That legitimacy matters, especially for institutional investors who may have previously avoided Hood because of reputation risk. The removal of Caesars Entertainment and the addition of Robinhood also tells a story about where the US economy is heading. Caesars, weighed down by debt and uneven casino demand, represents the old guard of entertainment. Robinhood, with its crypto exposure, digital-first platform, and massive retail user base, represents the new frontier of finance. The Index Committee doesn't make changes lightly, and the swap highlights how fintech and digital assets are becoming central to the financial system. Today's rally was largely about that recognition. But it was also amplified by market mechanics. After-hours trading on Friday had already signaled what was coming, with Robinhood stock spiking to $107 once the news hit. With fewer participants in those sessions, moves can be exaggerated. Come Monday, when full market liquidity returned, buyers piled in, pushing the stock even higher. Was there any other news driving this move beyond S&P inclusion? Not really. No new earnings, no new product announcements. The rally was squarely about the index effect. When passive funds are forced to buy, when active managers want to front-run that buying, and when retail investors pile in on the headlines, the result is exactly the kind of surge we saw today. Now, let's talk about the bullish case from here. The biggest positive is that this inclusion creates a new floor of demand. Passive inflows will continue leading up to the rebalance date. That helps explain why the stock didn't just pop and fade but continued to hold much of its gains throughout the session. Robinhood's fundamentals also support the move. In Q2, the company reported 42 cents in earnings per share and $989 million in revenue, up 45% year-over-year. Assets under custody reached $279 billion, and funded accounts climbed to 26.5 million. Average revenue per user rose to $151. These numbers show real scale and growth, not just hype. Beyond the numbers, Robinhood has a compelling roadmap. The Bitstamp acquisition expands its international crypto footprint. Tokenized stocks and ETFs in Europe point toward a future of 24/7 trading. Staking and futures diversify the business. The company isn't just riding a wave of short-term crypto enthusiasm, it's building out a diversified fintech platform. But let's also be cautious. Today's rally doesn't erase the risks. At over $100 per share, Robinhood is trading at a forward price-to-earnings multiple north of 40. That's a lofty valuation that assumes continued growth and flawless execution. If user growth slows, If crypto markets pull back, or if regulatory headwinds intensify, the stock could stumble. Volatility is also guaranteed. Index inclusions often spark wild swings as funds reposition. In the near term, traders should expect sharp moves both up and down. Crypto remains a big piece of the revenue puzzle, and its inherent volatility will continue to feed into Robinhood's stock price. And while inclusion boosts legitimacy, it doesn't protect against competition from giants like Schwab, Fidelity, or Interactive Brokers. So what should investors watch this week? The first thing is how the stock digests today's move. Will Robinhood consolidate around the 115 range, or will profit-taking kick in and drag it back toward 110 or lower? That will set the tone for the rest of the week. Second, pay attention to crypto. If Bitcoin and Ethereum rally, Robinhood will likely benefit. If they pull back, it could pressure the stock. Third, keep an eye on analyst commentary. With today's inclusion news, we could see a wave of updated price targets. Some firms already have bullish calls up to $130. If others join in, it could provide further support. And fourth, watch for any updates on Robinhood's growth initiatives. Bitstamp integration, tokenization progress, or new product launches could become even more significant now that the company is under the spotlight of the S&P 500. The takeaway tonight is this: Robinhood stock just entered a new chapter. S&P 500 inclusion is not just symbolic, it creates real demand, delivers legitimacy, and elevates the company's profile. Today's 15% surge reflects that reality. But the cautious bullish stance is to recognize both the opportunity and the risks. Yes, index inflows will help. Yes, fundamentals are strong. Yes, Robinhood now has a seat at the table with America's corporate elite. But valuations are high, volatility will continue, and execution still matters. For long-term investors, today's news is a reason to feel encouraged. Robinhood is no longer just fighting for recognition, it has it. For traders, the week ahead will be about managing the volatility that comes with such a milestone. So as we wrap up this Aftermarket Monday, remember, Robinhood is in the big leagues now. That changes the story, but it doesn't change the need for discipline. The path forward is brighter, but it's not without bumps.